Data collaboration enables innovative companies to uncover powerful new insights that transform customer experiences and fuel business growth. With LiveRamp, marketers get the industry's only interoperable platform for data collaboration across every cloud, walled garden, and media platform. Learn more at liveramp.com. Hello, everyone, and welcome to the Banking and Payments Show, a behind-the-numbers podcast from eMarketer, sponsored by LiveRamp. Today is December 10th, 2024. I'm Rob Rubin, Head of Business Development at eMarketer and your host. Today, we're joined by Principal Analyst Tiffani Montez and Politico Economics Correspondent Victoria Guida. Hi, Tiffani. Hi, Victoria.
Hi there.
Hey.
Tiffani, I'm so excited to have you back on the show, and welcome, Victoria. This is your first time.
Excited to be here.
Yeah. Because it's the first time in the show, I want to ask you a few questions for the audience to get to know you. So, what are you binge watching right now?
Well, I recently started Only Murders in the Building. I finished
that's
the
got a
first season.
big backbench, so that's a good one to choose.
Yeah, exactly. I've only watched the first season, so no spoilers, but enjoying that so far.
All right, that's an excellent show, and I think I think I'm behind on the last season, so now I have something to watch.
I'm going to actually write this down because I have a very long plane ride from coast to coast next week, and I'm always looking for something that's going to hold my attention for 5+ hours. So thank you.
Yeah, that's a good one.
Sounds good, yeah.
So today's subject is how the banking industry is going to be impacted by the second Trump administration. It's clear that change is coming, and I want to hear what you guys think about it. So what I'd like to do is just get right into our first segment today, the headlines. And in headlines, I pick an article related to the topic and we discuss it. But to prep for this episode, I Googled the topic, second Trump administration's impact on the banking sector, and I realized that this is not a novel topic, that there's a lot written about this right now, and it's popular. And so what I did is I sort of polled these articles, and I found that there's sort of 6 generalized categories of where this is going to be impactful, or the new Trump administration will be impactful from what the pundits are saying. And I wanted to read the 6 and just sort of get your feedback on it and see if is this where they're going to be impactful, which one will be the most, and that sort of thing. So the first is changes to bank capital and liquidity requirements. A lot has been written about that and how that might change, and the impact on large institutions versus small institutions. Certainly, a lot are expecting a less assertive enforcement of regulations and even deregulation. He's already said that for every new regulation he creates, he's going to get rid of 10. Support for non-traditional charters, which is a very pro-fintech thing, but that's been written about. Quite a bit of stuff written about crypto, the second Trump administration being pro-crypto. The 5th one is an increase in M&A activity, and then an ESG backlash. I even think that Don Jr. is working for an anti-ESG venture fund. So I can imagine there will be an ESG backlash, and perhaps that would relate to an increase in fossil fuel funding and lending rather. So, Victoria, is this a good list?
I'd say it's a pretty good list. Definitely there's going to be less aggressive enforcement, which is not only a party change, but also, I think in the wake of Silicon Valley Bank and a couple of the other banks that collapsed, we really saw enforcement have a big uptick in its ferocity. And I think that, a new administration will definitely change that tone. We don't know yet who will actually have the bank regulatory jobs. Michael Barr will still have his term at the Federal Reserve as the regulatory czar over there until July 2026. There is a question as to whether President Trump might try to remove him before then, but that's a whole legal rabbit hole. And so there might be some deadlock among the agencies because we'll get a Republican FDIC chair and we'll get a Republican comptroller, but Barr will probably stay there over a year. And so that might limit some of the changes, but definitely, I think, long-term and directionally, it will be a big shift. The only other thing I'd note is you mentioned the support for non-traditional charters. That I'm not sure of because that was sort of an interesting, actually a bipartisan thing where
Right.
you might remember that Tom Curry, who was the comptroller under President Obama, was the one who sort of came up with this limited charter for fintechs, and then that was taken up by his Republican successors. But then the courts kind of overturned it, and then Brian Brooks, who was the final acting comptroller under Trump, sort of tried to revive it as a payments charter. But there are a lot of legal questions around that, and so it depends who is comptroller. But I'm not certain whether that will come back or not.
Right.
But we'll see.
Okay. So there's one on the list that maybe you're not sure is going to be that impactful, but the other stuff certainly on the regulatory side. And in fact, I was reading this article just the other day about the fact that now that we're in a lame duck situation with the current administration and they know there's going to be new bosses, there's actually nothing going on right now on the regulatory side. It's like a pause.
Yeah, they were at a hearing recently where they said, no new rules. Now that doesn't apply to the CFPB. The CFPB has actually been doing a lot of stuff, but when it comes to the prudential regulators,
Yeah.
they haven't been doing that.
Tiffany, what do you think of the list?
I think the list is good. I think the thing that it makes me think of as is listening to both of you talk right now is what happens with open banking and 1033, right? There was lots of, we'll call it excitement about this in October, backlash from a certain respect as well. And will this actually stall progress on this, or will it actually be peeled back in any way, shape, or form? And what should financial institutions do in the interim?
What do you think?
Yeah, that's a really interesting regulatory issue because, typically when you see things out of the CFPB under a Democratic administration, it tends to be, something that industry doesn't like. But in this case, it's actually sort of industry versus industry, where, the banks are a little bit, or well, the big banks are actually suing over it. Um, but I think that the banks overall are skeptical of the rule, whereas the fintechs sort of see this as an opportunity to get brought into the regulatory fold, have more of a seat at the table when it comes to negotiating data standards. And we saw some support from, for example, Republicans, Patrick McHenry, who's currently the chair of the House Financial Services Committee. He's about to
He's
retire,
a
but
retire. Yeah, right.
he sort of was pro this rule. And I think that you see some Republicans support, pro fintech kind of support for this rule. And so that's a big question mark. I don't think that that's something that's guaranteed to be rolled back under a Republican
Yeah.
administration, but we don't know who's going to be CFPB director.
I mean, X is trying to become a payments platform, and Elon Musk has a lot of influence with Trump. So I wonder what role that could play.
He didn't already do that. He said he was going to do that by 2000 this year. We got a couple of days left here. It's going to happen. He's going to be a super app.
100%.
I think he's got some other things on his mind.
Maybe he's going to table that for another year.
I think we could probably spend hours talking about how the banking industry might be impacted by a second Trump administration. And I wanted to get to something that we haven't talked about yet. So I want to jump to it in our second segment called Story by Numbers.
Can I actually take a moment here, though? Because I think this is really important.
Oh,
Robin.
yeah.
And I can't believe that you didn't latch on to the increased M&A activity, because this is one that you've been trying to convince me of for years, that there's going to be consolidation in the market.
Yeah,
and so
you're
like,
right.
this is your chance.
Victoria, I'm sure you haven't been listening to all 50 previous episodes of the Banking and Payment Show. So I whenever I get an opportunity to point to who's going to win, the big banks or the small banks, I always pick the big banks. And there's like 4,500 banks in the United States right now. Like 10 years ago, it was probably double that. And I just can't come up in my head with a reason why there would be like even 500 seems like a big number to me. So I keep saying that there's going to be a massive consolidation. So do you think a Trump administration is going to accelerate that?
I definitely think it will accelerate versus the pace that it's at now.
Right.
I don't know that there's going to be some mass merger event, but definitely I think that the regulators are will likely be much more open to mergers than we've seen under the current administration. I mean, it also just seems like consolidation has been the trend for the past few decades. And so I feel like that's a pretty safe bet that that's going to continue. In terms of where we end up, I mean, that's kind of the funny thing about this, right? Is like we got rid of the barriers between interstate banking, and we've basically been seeing the market adjust over time to how
Right.
many banks it wants to have. And obviously, different banks play different roles. There's
Right.
now a big question about like regional banks, right? Because they don't necessarily have the same relationship lending that small banks do, but they don't necessarily have the same economy of scale as a big bank. So the question is like, what role are regional banks going to play in the future? I think that's a big question. I think we could see more consolidation there. Yeah, I don't think I don't know where we're headed. You might know where we're headed, but we'll
I
see.
think we are like the reason why I guess the reason why I didn't bring it up as like a thing to bring up as more is I just think that it's a constant thing. I don't know that it's going to change. I assume if the regulators decide that they're going to like let more deals come through, they won't put up as many hurdles, or if they're giving an indication that there won't be as many hurdles if you want to make that merger, then there might be activity. I wonder if before they
Mhm.
do mergers, they have conversations with regulators about whether that would be a big hurdle or a little hurdle.
Yeah, they do. Before banks announce a proposed merger, they float it by the regulators, and
Yeah.
they don't get a green light, but they basically try and make sure that they're
They're
not
not
going to get
getting
a
a
red
red light.
light.
Right.
Yeah.
Yeah. And I think I saw somewhere that they actually, that process of sort of going through and saying a final yes and a final no has been taking longer. And there's some expectation that maybe that could actually occur faster. And maybe as a result, that may mean that there's more as a result of the process being faster.
Hmm.
Yeah. No, I think that makes a lot of sense.
I think you can predict small banks, this is an aside, based on the age of the management team in terms of if they're going to get acquired or not, because I do think a lot of banks are sort of, they want to pay out. They want to get their pay. The executives in there want to get a payday, so they want to sell when the opportunity is good for them to do so. So then if the economy and things look good for them, they're going to want to sell. If they think that it would look better if I hold, then they're going to hold. So that's, I think, unrelated to, related to the politics of it, but unrelated in a way too. Can we do the next segment now, Tiffani? Are we good?
Yes, Rob, I've gotten all of my energy out.
I want to jump to story by numbers. In story by numbers, I pick a number or two related to the topic, and we discuss it. And today, my number is 7.29%, and that's the average 30-year fixed mortgage rate in the U.S. when I checked. And I'm sure a second Trump administration would like to see this number go down and would like to see the housing and construction industries heat up. So I want to discuss something which maybe is a little counterintuitive, but I want to discuss tariffs. And if the proposed increases in tariffs, like what are they going to, what impact could that actually have on the mortgage and construction industry specifically? If they raise the cost of consumer goods and construction materials, what will be the unintended consequences? What do you think?
Yeah, I think that that is one of the things that factors into that number. It's always kind of hard to know exactly. I mean, we could have a mortgage lender on here and tell you how they break it down, but it definitely is tied in part to the 10-year and the 30-year and all of these longer term yields that we've seen, you know, go up, stay higher than you might have expected. And
Yeah.
that's partially a result of expectations about tariffs, what they will mean for prices, what they will mean for growth.
But then there's also stuff like if consumer prices go up and for everyday items, you might see credit card delinquencies go up. And credit card delinquencies could be a factor that weigh into the way they price their mortgages because they're of what they're using. In other words, like the economy just starts to soften up. It changes how mortgages are going to get priced.
Yeah, I mean that's a sort of second, third order thing that makes some sense too. I mean, the other thing that tariffs could affect is just sort of the cost of building new housing, right? I mean, we know that we don't have enough housing, and
Right.
tariffs will impact things on, lumber where we already have higher tariffs.
Yeah.
And I mean, all of the things that go into making a house,
Right.
if it's, garage doors or whatever,
Right.
Um,
Refrigerators, dishwashers,
yeah,
all
Remodeling,
those things have parts. What's that?
yeah, which
re,
which all
re, remodeling our major home repairs that are like critical to being able to live in that home become an issue too, right? For the average consumer that doesn't have a way to pay for emergencies.
Yeah, so that all affects the availability of housing, which affects the pricing of housing. So, yeah, I definitely think that that is a extremely relevant factor
So
in the
will it
housing market right
change the
now.
interest rate? So to what extent will tariffs impact because I was trying to make this connection because my number was 7.29%. So we can talk about it sort of at a high level, but sort of, do we think that interest rates could be affected by tariffs?
Well, that's kind of, I was sort of making the point that I think that longer term rates in general are going up because of tariffs. I'm not totally sure whether the, specific, because you're making a totally relevant point, right? That when people are spending more money on tariffs, they have less money to spend on everything else.
Right.
Although that should slow growth, which could lead to lower rates, depending on how it all, I mean, you think about what happened in 2019, where the Fed actually lowered rates, and it was partially because the economy was slowing because of the trade wars. So that could lead to to lower rates technically, but it depends on how it all shakes out, right? And the Fed is not really making a
Right.
judgment call yet as to whether rates will go up or down because of tariffs.
I think it's another aside. One of the interesting things about the housing market and rates is that people who are living in a house with a really good mortgage rate can't afford to leave or upgrade their house because the mortgage rates are so much higher. So they can't get rid of the mortgage that they have and spend $100,000 more, $50,000 more in a house because the mortgage rate is so much higher, they won't be able to afford it. If rates go down, it could shake out a lot of the people who want to upgrade their house and move too. But at the same time, tariffs could be working against that.
Yeah, Tiffany, I don't know if you have, I'd be interested to hear what you think about that.
Yeah, I mean, if I think even about this a little more broadly, I think just tariffs is just one component, right, of what is going to potentially impact the housing market. If we also start thinking about immigration and mass deportation, what does that do to the actual housing market in terms of, to your point that you mentioned earlier, building new homes or even remodeling homes or any of the things that we need to do to deal with being able to make sure that we've got enough houses for affordable housing for people.
I heard this interesting stat. I'm not sure if it's related, but it feels kind of related. From 2008 to 2014, the Department of Homeland Security deported about 500,000 undocumented immigrants through its Secure Communities program. They found that for every 100 migrant workers who were deported, 9 fewer jobs existed for natives. They also found that native wages only fell slightly. The article sourced is from The Atlantic.
Yeah, good point. Yep.
Yeah, no, I mean it's the economy is not fixed, right?
Right.
It can grow or shrink.
So I don't think we came to a really like a good sharp point. I think we have a lot of good reasons why tariffs are going to have an impact on the industry overall. I don't know that we can point directly to a causal relationship between tariffs and interest rates on mortgages. Would
I
you
think
agree
there's
with
too many other dynamics that go
there's
on
a
that
lot of
impact. Yeah.
I mean, I
other
think it's a factor.
Yeah,
Like I
absolutely.
don't think it's irrelevant to the rate.
I mean, if they didn't, like, you could argue if they weren't there, because rates have been trending downward now. If we didn't have tariffs, rates might still continue to go down unless the economy's too hot, and then they don't want to lower them anymore. At the same time, if we so if you took tariffs out, you might continue to see a downward trend. But if you if you put tariffs in, the Fed might actually hold interest rates steady as well as a reaction to it, to increase consumer costs.
Right. Well, and also the Fed cutting rates is not guaranteed to have a one-for-one relationship with mortgages, right? Like we've seen the Fed cut rates and mortgage
And they
rates have
not
gone
dropped.
back up.
Right. Why
Which
is
I guess
that? Is it an anticipation of a new administration? Are they hedging?
So I do think that part of it relates to the move up in long-term rates. You also hear people talk about the way that the mortgage-backed securities market works, where because of the oddness of mortgages, where when rates go down, it means that people are more likely to refinance, which means that then they pay off their mortgage, and then that affects how the pricing of the bond, right? And so that is also probably a factor in why rates have gone up. But yeah, I mean, I think that policy expectations and growth expectations, right? Because growth has been much better than people expected, and people now expect it to be higher than they originally thought.
There is a lot of uncertainty here, and nobody has the answer, which is why there are so many articles being written about the subject. It's really a fascinating topic, and I want to thank both Victoria and Tiffani for joining me today to have this conversation. Thank you so much.
Thank you.
Thank
you. Great.
And thanks to everyone for listening to the Banking and Payment Show, an eMarketer podcast made possible by LiveRamp. Also, thank you to our editor, Lance. Our next episode will be January 14th, so be sure to check it out. See you then. Thanks, Victoria.
Thank you.
I really appreciate it. Tiffani, as always, thank you.
Yep, it was great being on the episode with both of you. Thank you so much.
Awesome. Have a great day, everyone.